It doesn't matter if you were right or wrong, but how much you win when you are right and how little you lose when you are wrong. George Soros, not one of my favorite people in the world, but an incredible trader, someone who has made billions off of his ability to capitalize when he goes in the right direction and minimize losses when he goes in the wrong direction. And remember, these charts are not perfect. The world can be a squirrely place. The reason we use the charts is because they are usually correct. They are a large percentage of the time. And what we want to do when they do move in our direction, we want to capitalize and make all that we can. And again, when they don't or something strange happens, it's been a strange week. Not only was it an options expiration week, it also was a week where the Fed was meeting. And it's the summertime trading zone, which stinks anyway because of the low volume in the market. So a tough week. Don't beat yourself up too much. Now, I know a lot of you are singing your praises because you jumped into gold. And of course, it has just pounded up again today. Everything else down. In particular, I'm a little disappointed by bonds burning off so much. But again, we see bonds losing, we see stocks losing. NASDAQ a little bit, the S&P the most. Let's jump into these charts. Strangely enough, even with a down day, after all of the up movement throughout the course of the week, even though the derivative oscillator is still negative, we do technically have a weekly vertical crossover going up on the S&P 500. Not super excited about that, but that did occur. So of course we will call it. We don't have to like what the charts are doing. We don't have to think things are warranted because the market doesn't care what we think, my friends. The market's going to do what the market's going to do. Our job is to follow it. Be aware of this information. Let's look where things are on Monday. You might have a jumping in place for more up movement. Now, is it shaky? Hell yes. Why? Well, we see where the derivative oscillator is still negative. We see where the price percent oscillator is in a divergence. You know, if we hit where it topped last time and where it is now, we have a down moving line. And of course, we have things topping out higher with the price percent oscillator lower. So again, and lots of, well, not very much volume, lots of warning signs going off. But again, that's what the charts are showing us. That's what it's showing us with the S&P 500. We'll pay attention. Nobody says you have to do anything. Just be aware. What do we see going on with the 2-day chart? Well, this latest 2-day chart only represents the first day of movement on Friday, and it's going up about where it was on the prior 2-day candle for Wednesday and Thursday of this past week. Derivative oscillator continuing to gain upward momentum. Price percent oscillator losing a little bit of momentum on that first day of the latest 2-day candle. 4-hour chart, again, things peaked out on the morning and afternoon of Thursday and then moving down. It was a down day, down 0.63%. So again, look at the market on Monday. See how things look, if the market's going to be burning off or if it's going to be juggernaut heading up again. You can sure make a rational decision on a practice trade, whether you want to get in with this weekly vertical crossover, turning over so quickly after a very short crossover going down. So again, we look back in time, my friends, we don't see that for way back. We got to go back to somewhere in about, oh gosh, again, summertime trading zone, how sucky it is, all the way back to 2017 around this same time period, early June, where it gets screwy again. But you know what's beautiful about this chart? For those of you who this has upset, look back in time and see how little that has happened, okay? And again, there was a trading opportunity not on the S&P 500. There was a good one on the NASDAQ 100, a very short one. But again, there's always a bull market somewhere. And learn from what happens when the market gets squirrely on you. And we will just continue to push through, learn, move forward, and keep learning. Okay, and again, maximize gains, minimize losses. follow the charts. Let's keep going. What's happening with the Qs? The NASDAQ 100 down for the day 0.15%, just barely. And again, a strong up week for the NASDAQ. Don't have a crossover, so the overall mood is still down. Derivative oscillator still negative. Price percent oscillator's heading up, but is a little bit of ways away from crossing over, going up. 2-day chart. What do we see there? First day of the latest 2-day candle. The body's moving up. The wick is not moving higher than the prior wick. Price movement's well above the 2-day trend line. And I guess my question is here, why is the 2-day trend line so far down? That doesn't make any sense. We'll reconnect that and make sure that we have that hooked up correctly. There we go. So again, price movement is still above the 2-day. Price percent oscillator heading up. And we'll just wait and see how things shake out as the week starts. What's going on that 4-hour chart? We can see that for 2 days, things have really been sliding sideways, staying below where things topped out on the candle body back on Thursday morning. So we'll watch and see what there is to see. If the next week holds a rollover going down and we have the opportunity for the 2-day to cross over, giving us a potential jumping in point on a down move, we'll be ready for that. If that doesn't happen, we'll be ready to not do that. Okay, let's keep going. What's up on bonds? Bonds, we have a weekly trend line that is still, a price movement is still above it. See a little bit of weakening over the week of that up movement on bonds. The derivative oscillators gaining some momentum. Price percent oscillators heading up, just a little bit of momentum. First day of the latest 2-day candle, red spinning top so far. That means, of course, indecision tending down after 3 prior up candles. Price percent oscillator heading down. Hasn't crossed over yet. Hasn't penetrated the 2-day trend line, still above the weekly, but weaker. And what do we see on that 4-hour chart? Boom, we see lots of down movement in the morning with more down movement in the afternoon pushing through. Wow, all the way back to where things were on somewhere around Monday. So again, had some nice up movement, now moving over, crossed over in the morning, headed down further in the afternoon. Derivative oscillators now gone negative on us too. So we'll continue to keep our eye on things, see what we see there. Again, if things rotate back over going up, might give us a jumping in point. Those of you who are in, just continue to keep your eye on the 2-day and the weekly. The 4 hours already rolled over, but again, your main sources of strength always in any trade, your bigger charts. Bigger the chart, bigger the money. But remember, all things come to an end and they do start on the 4-hour chart. Is that like talking out of both sides of my mouth? That's like saying that you got to practice every day with us so you understand the nuances of what it is we do and why we do it. And if you don't have the book, it's available. I have an autographed copy for you. 8th printing, going out all over the world. If you're listening somewhere overseas, email us, cw@chartingwealth.com. That's our email address for your questions and your overseas orders. Just say, I want to get the book. We'll send you a PayPal invoice. You can pay it there. For some reason, Square, there's a link in all of our show notes. Square will allow you in the States to sign up for to subscribe to our book. Subscribe to both our, I'm sorry guys, it's been a long week. It'll allow you to buy our book. Of course, you subscribe to our channel, at chartingwealth.com. I'm going to stop. Let's just keep moving through these charts. Maybe that's a sign. Okay, let's go. After TLT, we go to gold. What's going on with gold? Gold jammed up strong on Thursday morning. More up movement on Thursday afternoon. More up movement on Friday morning. And then topping off a little bit higher Friday afternoon. We can see where it bled off a little bit of energy. But again, super strong. Gold had been sliding sideways, tending up a little bit, and then just blasted off Thursday morning, jamming up. And I know some of you jumped in that Thursday afternoon and have seen things move up nicely, and that is good. Just continue to keep an eye on gold after all that up movement as we continue to watch gold as it has moved up. But of course, as it petered out a little bit toward the end of the day, hitting a little higher, but right same wick about the same place. So just keep your eye on things. Pay attention as we go into the next week. Of course, you've got a nice strong as far as gold goes. We've got strong up movement after that weekly vertical crossover back on the week ending the 7th of June. And when we look, of course, at the 2-day, as I was stating earlier, look how strong that 2-day chart is. So again, price movement looks nice. Keep your eye on gold as it continues to soar. It's the only thing up for the day on Friday. All of our other charts were down. Our biggest downer was, of course, 20-year bonds. Folks, that's where we are. As we wrap up this week and go into the next, again, keep in mind this is a tough, tough time of year to trade. So keep practicing. Don't just not do it. Need to be in the market every day, paying attention and learning why the summertime trading zone stinks with the low volume, but how you can nonetheless find good trades. We love to hear from you. cw@chartingwealth.com. If you've not signed up for our daily market reviews, which includes this weekly market review and forecast, please do so at chartingwealth.com. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.